January 4th, 2023, or sorry, 2024. Something I thought was really interesting today was, well, first off, we had essentially an attempt at a low two on bar six, and then we got a breakout above it. And when we got the breakout above it, the measured move target is essentially this, right? You want to get a measured move up of the two legs. And seven is trying to, get there for the bulls. And I thought that eight was interesting because seven was a really big bar. So where's your one-to-one risk reward on bar seven? Your one-to-one is up here. So it doesn't really make sense to buy directly above seven. What traders might do though is look to buy a pullback of bar seven on eight. And why did bar eight pull back to where it did? Well, if you bought above seven, where's your stop? Probably below seven. And your profit target is right here. So you have roughly, let's say 60% chance of getting to the profit target before you get stopped out, maybe even a little higher. And where is the 50% mark between the two of them? Because if you can buy at the midpoint, the 50% marker with, 60, 65% chance, then you have a really good equal traders equation. And you can see the tail on eight went down a little bit past the 50% marker, and that's where traders bought. So it makes sense that they, didn't want to buy necessarily directly above seven because it was less likely that they were going to, that the traders equation wasn't as good, but it made more sense they wanted to buy a pullback. Additionally, if you bought above seven, you weren't able to make 5 points. You were only able to make 4 points. But today, traders were wanting to make 5 points. So if you bought a pullback of eight, you were able to make those 5 points and maybe even a little bit more. So I thought that was interesting. Bar one, a big bull bar. Essentially, it's a failed breakout of yesterday's low, and the sell-off from yesterday is really strong. So while we might get a rally here, it seems more likely that we're going to end up getting a lower high because this is so strong. So I think we're going to end up getting a lower high. Follow through for the bulls on bar two, but big tail on one and big tails on both sides of two. So really not all that good. We're probably going to pull back here. Three, bad follow through, but I don't really think we're going much lower or higher. I think probably buyers below three and probably sellers above three. So limit order trading. Could argue that bulls maybe buy a 50% pullback of the whole move, but which we touched on. Three. Four, some follow through for the bears, but reality is I think that the bulls who bought the close of two disappointed three, getting out during four around break even. If you're going to take buys like this, you need to be pretty quick to get out. If you're buying this close, you're probably scaling in lower and then, just basically taking your profit right here. Five, a bull bar, but a big tail on the top, essentially two legs up, really not all that great. Bulls are hoping that this is the start of a bull trend. Bears are hoping to set up some sort of low two, which they do get on bar six. But if you're selling six, you're selling a low two, and you're really deep in this bear trend, and it could be, three pushes down, one pullback, two pullback, and you could argue three was the gap, and it's a two-legged correction from a wedge, 1, 2, 3. But I don't think that that's a very good sell because you're probably just selling what's the bottom of the trading range. You got to remember that this, while it was a strong spike, it was within a trading range. So overall, expecting a trading range here. You could argue this was an expanding triangle too. 1, 2, 3, 4. But we didn't get the new high. 7, big bull bar closing near its high. I already kind of talked about it. I don't think it's a very good buy. I think you're buying high in what is a developing trading range. If you're buying there, you're kind of expecting to sit through a pullback. Traders looking to buy a pullback, which they got on 8. 8's a much smaller bar than 7, so the momentum is clearly not as strong as it could be. More follow through for the bulls on 9, but 9 is a worse bar than 8. So you have this really big bull bar and then a much smaller bar and then another much smaller bar. So you have shrinking bodies and increasing size of tails. So really not all that good to be buying up here. Then you get a bear bar closing near its low on 10. Pretty hard to stay long after 10. A lot of traders would exit below. But if you're buying, it's kind of difficult because I think if you're buying above 8 or 9, you kind of signed up for it once you see 10. So it's hard to want to exit because you had to be expecting something like that. So I think a lot of the traders who are taking that kind of buy are going to look to scale in lower. We could pretty easily test back down to this high. Why this high? Well, there's an open gap. So the traders who sold above this high are right now trapped. Will they stay trapped? Probably not, because I think that it's more likely we're going to get a trading range day today. This looks like trading range price action to me. It doesn't look like a strong bull trend. And if it's a trading range, you have to expect these gaps to fill, which it did later today, and that's why we got support here. 12, a high 1 triggers above 11, but really not all that strong. It's a bear bar, so you don't really want to buy above the bear bar. And it's a doji on 12. Bull bar on 13, but a weak close. 14, some bears would argue it's a low too short, 1, pullback 2, but it's not very good after these 3 strong bull bars. I think if you're selling 14, you're selling the bottom of a tight trading range right on the moving average. So I'd rather wait and see if you get follow through. We could test back down here, but the reality is, your risk reward, we're probably not going to immediately test back down here. And even if we do, your risk reward isn't all that great. So I don't think 14 is a very good sell. Big bull bar closing near its high on 15. Bulls want spike, 2-legged pullback, and then start to channel up on 15. But 15 is now at the top of a tight trading range, so really not all that awesome. Follow through on 16, but a big tail on the top, and it's a much smaller bar. So I kind of equate it to like 7 and 8. You get big bull bar 7, and then kind of disappointing follow through, a mediocre bar on 8. Big bull bar 15, but a very mediocre bar on 16, much smaller than you'd want it to be. And that's why there aren't buyers here. Traders are buying the pullback instead on 17. So you can see here, it's pretty clear that traders are buying pullbacks and they're not really buying above things. Disappointment on 18 for the bulls. You could argue it's down, up, down. So 2-legged correction. You go down on 17, up on 17, down on 18. So it's a 2-legged pullback in a bull channel. 19, probably sellers above 18, scaling it higher. 20, a bull inside bar. So it's a triangle. So essentially we're in breakout mode. This whole thing is essentially a triangle. So you could argue it's a nested triangle. In the moment, I was more looking at this as a channel up than a triangle. I thought it was more of a spike in a channel. And I was still convinced we were going to get the lower high, though I didn't know how much higher we could go. And we obviously did end up getting the lower high. But we got a big breakout on 21, but the bar is way too big. This is a climactic bar. This is a trading range. This is trading range behavior, right? Where you're going to get vacuum tests. Bars are going to get too big. It's going to be difficult to take trades on stop orders. And that's exactly what happened on 21. Reversal down on 22, hoping that 21's a bull trap. It's a wedge, 1, 2, 3, or 1, 2, 3, 4. But I was looking at it as 1, 2, 3. So it's a wedge, and we could end up getting, I'd say 60% chance we're going to get 2 legs sideways to down. Inside bar on 23, but probably just a final flag. I don't think that this gap is going to stay open. This is the gap that we have, right? So we have this gap, and then we have a second gap forming. And if we can keep 2 open gaps, then we could channel up all day. But reality is we're probably not going to be able to do that. 24, a double top with 22. Some bulls might start to exit, and we get some follow through selling on 23, but we're not quite able to close the gap. I think that 26 is the last ditch effort from the bulls, essentially, to keep the gap open and continue to get a swing up. 26 was on its high for a lot of the bar, but ended up selling off. And once it sold off, traders, they just basically lost interest. Once 26 was the last effort for the bulls, hoping to continue up and get above this high. But it ends up being a really disappointing close. And so traders exited the market, causing 27. Do you sell 27? Kind of tough to do that right on the moving average. I would wait to see if you get one more bar. And you do on 28. You get a bear bar closing near its low. I think 28 is a good sell for a lot of reasons. I think that since you closed this gap and you closed the body gap, right? If it had stayed, if there was no close below this body, essentially the breakout point, because on a line chart, right, it just tracks closes. So if there's no close below this close over here, then on a line chart, there's still an open gap. And it would still qualify as 2 open gaps. But you get 28 and it closes that gap. And now you got to be thinking, well, if we're closing gaps, first off, 24 to 28, really tight bear channel, unusually tight bear channel, especially if this is a pullback. You got to be thinking this was a wedge, and now we're getting a tight bear channel, so we might get a sell-off here. And you got to be thinking, selling 28, well, we're probably going to close this gap because it's a trading range day. I'm not sure we're going to go straight down, but we're probably going to close the gap. 29, a bear bar. The bears who sold below 28 were able to make exactly 5 points. You can see. So sell below 28, traders made 5 points with 0 true risk. They scalped out. One of the reasons is because 29 was getting so large. And again, large bars in our trading range price action. Deep pullback 29. Some traders sell the close of 29, hoping that we're going to get back to this low. I thought it was still a valid sell because you got a deep pullback. So first off, this is strong enough for another leg sideways to down. And you got a deep enough pullback that it's a reasonable scalp to sell this close, hoping that we get down here and close this gap. It's kind of disappointing. Inside bar 30, and then we end up testing down on 31 to that low or to that high. And once you get this, I think most traders start to exit here, and that's what's causing the sideways. I don't really think it was, there was many reasons to be long or to be short, beyond this magnet. I thought that was the important magnet. Disappointing follow through on 33. Buyers below on 34. 35, a double top with 33, but not really all that good. You're selling low in what's probably a developing trading range. 36, not great either. Essentially a double bottom of 33. You'll notice that it's a tight trading range, and generally you get tight trading ranges late in trends if it's going to be a final flag. 37 tries to break out below the final flag, and big failure on 38. So, you probably want 38 to be a little smaller, but it's probably a credible buy above 38 if it triggers, even though this bear channel is pretty tight. And do you buy above 38? Well, it never triggers. You can see on 39. So bears sold to close at 38, trying to keep other traders in, and that caused 39. Though at this point, you should probably be thinking, well, this is a good bull bar. And this is potentially a final flag. We might have to test back up towards the apex of the final flag, which was what was going on over here. And I don't really think we're going to go all that much lower. So traders will start trailing their stop above any individual bar. So a lot of traders, they see a doji on 40 and they'll just get out above 40, or a point or two above 40, or get out above 41. So I think that 41 is just bears buying back shorts. That's why it closed so strong. Disappointment on 42 because most of the bears have bought back their shorts. 43, it's two legs up, one pullback, two. We're probably not going that much higher, but we're probably, the upside and the downside are limited at this point. I think it's just going to be a trading range. The bulls are getting too strong of closes, and we're too low in the range for me to think bears are going to take control here. And, we're generally, this channel is too tight for me to think that we're just going to rally straight up. Bad follow through 44, buyers below 45, sellers above 46. You can see it's a limit order market. Inside bar 47, it's potentially three pushes up, but not all that great. Follow through 48, and then we get sellers at the moving average 49. Some sellers again at the moving average 50. 51 triggers above 50, which makes the buy above 51 worse. Bulls are hoping that 51 is a good signal bar. Well, it is a good signal bar, and they're hoping since it goes above the moving average, we're going to get a measure move up to here, back up to essentially this low, where some bulls got trapped. You can see there was an open gap for the bulls who bought below 26, trapped 27, 28. Bulls are hoping 51 is going to get big follow through and we're going to get a big rally, but instead you get a disappointing bar like 52. When you get 52, it makes traders think this might be some sort of wedge rally to the moving average. And so they're going to sell it around break even. And that's what they did at the high of 51 during 53. And that's what caused the selling on 53. Can you sell 53? You can probably sell 53. It's, 40% chance of a measured move down. But a lot of times when you get these 40% chance of a measured move, it's really difficult to hold through the whole move because you get so many reversals. Like it's, I think you're probably getting out above 57 and everyone's definitely getting out above 64. So they're just generally difficult. Some follow through on 54, but not all that great. And it traded above 54, which is disappointing for the bears. You didn't want the market to pull back this soon. And even though it did pull back and you get a strong bear bar closing near its low 55, this is not as strong as it could be. 56, small bar, just really not all that great. Big tails, 54, 55, 56. So small bars with tails, it's bearish. It's probably, sell to close, probably going lower, but it's really not all that good. 57, reversal up. I probably personally would exit above 57. It's a double bottom, lower low, double bottom. And it's just kind of a failed breakout below the low of 40. So I would probably exit there. And then you get a bear bar closing at its low 58. Traders can sell again if they got out. Follow through 59, 60. And then you get 61, a bull bar. And essentially you end up getting three pushes down, 1, 2, 3 to 64. And I thought 64 was an interesting bar. I thought we might have to get to a new low on the day when we started to get this tight channel down. But you end up getting, a slightly, one tick higher double bottom with one, and some traders will buy above 64. If you're buying above 64, what's the target? Well, I think, the top of the bear channel is an obvious target right here. And it's a trading range day. And if you're betting on a trading range day, the midpoint of the day is fine too. If you'll notice, the midpoint of the day is right back in the middle of this tight trading range. So it's a logical target to have up here. And I think, you're getting, I don't know if you get 2-to-1 buying above 64. Not quite, but it's, it's good enough that you can buy above 64 expecting a second leg up, even though this was a tight bear channel. But if you're buying above 64, you have to understand you're buying in a tight bear channel and it's overall somewhat bearish. So you don't really want to, bears are going to exit above 64. But what I'm saying is you don't want to buy above 64 and just close your eyes and walk away. If you're buying above 64, you want to see good follow through on 65. You want to see a bar like 68 on 65. And instead, when you get 65, the big tail on the top, the disappointing bar, a lot of traders, they're just going to exit at the market. There's no true risk, right? Because the low of this bar was the low of the bar. So traders immediately bought it, hoping we're going to get a strong rally. And when we don't get it, traders just take a point or two on, I bet they were able to make 2 points during the high of 66. So if you got greedy, you could have held and gotten out with 2 points on 66. But for me, I think when you see 65, a lot of traders are just going to exit the trade because 65 is a disappointment bar. And that's why 66 happens. You do get a pullback on 66 and potentially a second leg down 67. It touches the close of 63. So bears who sold the close of 63 really disappointed 64, 65, looking to get out around break even. And that's exactly what happens on 67. They scale in higher. 68, a big bull bar. Where the downside's probably limited for the rest of the day, but it just looks like a second leg up, and that's all it was. Traders, anyone who bought up here is getting out around break even. That's why you get 69. This 2-bar pullback was, it was too much and too deep for me to think that, the buy is back on when you see 68. Makes me think this is just a couple legs up in what is probably a trading range. 69 closing essentially on its low. You could sell below 69, but the risk is big, so it's not all that great. You get disappointing follow through on 70. Traders probably trying to scalp out with 5 points. And they were 1 tick short of scalping out with 5 points, so potentially a trap. And you end up getting a double bottom 72. Not that good. I think if we were going to go up, we would have done it already. But you get 2 failed breakouts of the low of the day, so there's something there. Any traders who do buy, just take a quick scalp to the moving average. No one's looking for, probably not looking for a swing at this point. And if you were looking for a swing, you're disappointed in 73 and 74. You have to be expecting disappointment, especially if you're taking something like this. And you get the disappointment, traders exit, and then you get a collapse into the close. I would probably just let this go. It's a breakout below a channel. This whole thing is a channel. And we're getting a breakout below the channel, so low probability of success. For stop entries today, I didn't really love any of this for stop entries. I think maybe 20, but I think kind of hard to take. I thought 28 was a good stop entry. Probably 53 was probably fine, a good swing, but hard to hold. If you get out, you have to sell again below 58. So I'm not super convinced this was the best stop entry day, but there were a couple of decent trends if you can get in on them. On the daily chart, I'll say for always in, I thought it was probably always in long on 7, but not all that great. And it probably stayed always in long until I thought 28. Then we're probably always in short, definitely always in short 29. And it probably stayed always in short for the remainder of the day. I don't think we ever really clearly flipped to always in long again, but it would have been really hard to hold short through all these reversals. On the daily chart, big tail on this bar, so I don't think we're going that much lower. I think we'll probably get a small bounce tomorrow. If you notice, that's perfect. We're in a bear channel, and it's been about 3 days, and typically bear channels don't last 3 days. If they do last 3 days, it's usually only 3 days, and you have to keep in mind that 3 days or 200 bars. So you have to keep in mind though that most likely 2 hours of sideways stop trading tomorrow. And I think it starts here with this big breakout. It's probably a failed breakout below this channel. So I think we're probably going to get some sort of bounce for a couple hours tomorrow. And like I said, daily chart, I think we're going to end up getting a bounce. This is a tight channel. This is an unusually tight channel for this sell-off. So I think the first reversal up, traders will probably sell it and we'll get a couple legs sideways down, but we might not be done on the downside. It's possible that we go ahead and close this gap pretty soon here. And that's today.